Good morning, everyone. Today we are looking at investing in mutual funds, bonds, sukuk, and other fixed income instruments. And the way I like to set the premise for this class is to help you understand how the world works. When you think about finance generally, finance is divided into three broad categories. We have personal finance, business or corporate finance, and public finance. All of those branches of finance are great on their own, and you can learn and apply principles across board. There are some principles in public finance that can be applied to personal finance, but there are some principles that can be applied to public finance that if you try to apply to personal finance, you get into trouble. And I'm going to give an example of that. The world economy runs on debt. That is something I want you to keep at the back of your mind. People would say things like, get debt. Debt is leverage. When you run a business, there's so much you can do on the strength of your own personal resources. You need to borrow money from other people or use other people's money strategically to grow your own business. So I've seen people ask me, can I borrow to invest? So all of those things are not direct yes or no. They are nuanced in most circumstances, and you have to look at different factors before you make a decision or take a position. The world economy runs on debt. And what do I mean by that? Debt is a foundational element in the modern global economy. It fuels growth, enables investment, and allows both government and corporations to manage cash flow and fund large projects. Rather than being a sign of financial distress, debt, when managed responsibly, is a strategic tool for economic development. There is no nation of the world right now that does not have one debt or the other. All nations, all countries borrow. There are only maybe about one or two that are not really into debt right now. They'll rather just bootstrap or internet generated revenue to grow their economy. And for the case of our country, Nigeria, when I think about our debt, it's not so much about debt, but the fact that we don't have resources, we don't have the production to meet up our debt obligation. What do I mean by that? If you take Nigeria and apply personal finance to the case of Nigeria, it's like someone that is earning 100,000 every month as your salary, but you have a loan that you have to repay every month. You have to repay 200,000 every month. So it means every month you have, when your salary comes into your account, the bank is waiting for you to pay 200,000, but it's only 100,000. It means your account is constantly in debit of 100,000 every month. You now need to find other ways to pay up that 100,000 deficit. That is the case of Nigeria. We are not producing enough to be able to meet our debts and developmental obligations. So borrowing in itself is not the problem. The problem is you don't have enough capacity to pay the debt. Because when you think about it, US is US is still the world power. I was speaking to someone and we're like, okay, what's the big deal about US? And the only thing that we could come up with is US is just US. US is a country on its own, and all of that. So there has to just be that conclusion. Of course, one of the things that make the US the world power is because of its currency. The currency of the US is the globally acceptable currency. So most of the things, when you're doing things in international trade, when countries trade between themselves, the currency that they use is the US dollar. So if Nigeria wants to buy something from China, they will use the US dollar until Nigeria now signed that agreement. Right now, there's an agreement that has been signed, a currency agreement that has been signed between China and Nigeria that enables Nigeria and China to trade with their individual currencies, right? So it means when China wants to buy from Nigeria, it can use Naira. When Nigeria wants to buy from China, it can use Chinese currency as well. So they don't have to use a third-party currency like the US dollar. But that's just an agreement that has been signed. And that is what also gave birth to what is now called BRICS. BRICS is a block of 5 countries that have come together to say that how can we build our own economy by mutual collaboration amongst ourselves so that we can at least do without the US for a while. So BRICS is Brazil, Russia, India, China, South Africa. Those 5 countries are the countries that forms what is called BRICS today. Why am I going through all this route? How am I explaining all this economic context? The way you're going to understand this model is to think about it from the mindset of an economist. So there's going to be a lot of interaction along this line, right? So when I said the world economy runs on debt, government borrow money, individuals borrow money, corporate organizations, they borrow money. That's what led to the concept of corporate or business finance. When they want to borrow that money, where do they borrow the money from? It's called capital market. First off, let me backtrack. When Nigeria borrows money, there are 2 components of Nigeria's debt. Right now, I think they said Nigeria's debt is going to like trillions of dollars. So if our debt is going to trillions of dollars, where did that money come from? 2 ways. There is a foreign debt and domestic debt. Foreign debt is the one that Nigeria borrowed from the likes of IMF, that is International Monetary Fund, from World Bank, from Afrexim, African Development Bank, and all those DFIs. DFIs mean Development Financial Institutions. Those are the guys that give money for infrastructural projects in different countries, right? You can take that debt and pay it for the next 30 years. One administration after the other, you'll be inheriting the debt forever. You won't pay it. In fact, someone said that the way national debt are designed is designed in such a way that companies can never get out of debt. The concept of debt freedom that we prioritize in personal finance, in your own personal life as an individual, you should achieve debt freedom, meaning that you get to that phase in your life where you have zero debt. You don't have debt hanging over your neck. But for a country, it's mostly impossible. The way it is designed, they've designed the world system in such a way that countries will always be in debt. They can never be debt free. So when they want to borrow the money domestically, government wants to borrow domestically. And I said a country's debt is broken down into 2 parts. There is the foreign debt and local debt or domestic debt. Domestic debt is the one that they borrowed from you and I. For example, Nigeria is owing me right now. How can Nigeria be owing me? Because Nigeria borrowed money from me through an instrument that they issued that is called bonds. So every month, all Nigerians have the opportunity or the privilege to lend money to the government through the federal government savings bond. And I will discuss all of that in details. But understand the concept of the capital market. The capital market is where they come to borrow money from. Last week, we talked about the stock market. The stock market is an offshoot of the capital market, right? Because capital market is broader than the stock market. So all investment that you can think about will come under. So capital market is the umbrella name. Stock market is a subset of capital market. It's like saying Lagos market, Lagos Island market. For most of you that live in Lagos, you know Lagos Island market. Within Lagos Island, there is Balogun market. There is Gorodun. There is Mandelas. So in the same way, capital market is the umbrella name. Stock market is an offshoot or a subset of the capital market. So the capital market is generally divided into 2 components. We have the primary market and the secondary market. And the primary market is when you buy directly from source. Secondary market is when you buy from those that are bought. You will see why I'm taking time to explain all of this, because it will come out later in the course of this presentation. So if government wants to raise money from members of the public through bonds or T-bills, let me use T-bills. there are two ways they can do it. They can say that for those that have a lot of money, that have enough money, you can buy T-bills directly from the government. But of course, how does it really work? Does it mean you walk up to Aso Rock and take the money and go and buy it? No. Government would appoint an agent to run that program on its behalf. For T-bills, the agent that government assigns to run that process is CBN, the Central Bank of Nigeria. And it happens bi-weekly, that is every 2 weeks. The CBN would open up that it happens through a bid system. They open it up and say, federal government wants to raise money for so period. 3 months, 6 months, 9 months, people can subscribe. But the minimum is 50 million. That is primary market. So some people will come and say, okay, I will show us how that works later. But that's the primary market when you're buying directly. Secondary market is when you are buying from those that have already bought. So when you log onto your app right now to buy mutual funds, to buy T-bills, to buy stocks, what you're buying is you're buying at the primary market, at the secondary market. In the same way, when companies want to issue shares for the first time, I've told us about Dangote refinery. We're all waiting for it. And the good news is they've said by April, the company has said it would release it by April so people can start subscription. So we're all waiting. When Dangote issue that shares for the first time, what they have done, we are buying from Dangote directly. It doesn't mean we are going to Dangote refinery to give them our money. They're going to appoint an agent. An agent is going to coordinate the process for them, but that is primary market dealing. Another example, someone said, currently UBA is selling rights issue. You can buy shares. When you are buying shares, there is public offer and there is rights issue. There are two different types of ways that people can buy shares. Public offer is the one that is open to the general public. But rights issue is specifically to shareholders of the company. What does that mean? I did a video earlier this morning that I've sent to my guys to edit. I'll post it later. But it just tries to explain the concept of rights issue because I've gotten a lot of questions that UBA is currently selling the rights issue for 15 naira per unit. And if I go on my app, I'm seeing the shares at 45 naira. Does it make sense? Why would I buy a new issue at 15 naira when the old issue is 45 naira? And the concept of rights issue in itself is so that people or shareholders can have those shares at a discount. Example is what fits in. That fits in one is a no-brainer. Everybody wanted to buy it. Why? Because the rights issue is selling at 35 naira. Meanwhile, the current market price of that share is 74 naira. So think about it. So it means if I buy the rights issue at 35 naira today and they give me those shares, even if the market price does not change, I will sell at 74 naira in another couple of months. And I've made more than times two of the money that I put in it. Right. Those are primary market dealing when you are buying directly from the issuer. Secondary market is when you are buying from the ones that have already been issued into the market. I'll explain that very well subsequently. So government issues bonds, sukuk, or treasury bill to raise funds for infrastructure, social programs, and budget deficit. In fact, they raise these funds to pay debts. If government sees that they are owing 5 billion and from what they've seen in their own projection, there's no way they can make that money from revenue. Let me pause and ask us, what are the ways that government of Nigeria makes money presently? You guys know. I want you guys to put it on the chat box. What do you think are the ways that government makes money? Revenue stream. Just like you're working and you're earning salary. Where is the salary of government coming from? It's not just one stream. I want you guys to put it. Tax, yes, is one. Offering services. Give me an example of the service. Be more specific. What do you mean offering services? Give me an example. Oluwaseun, yes, taxes. Oil export, yes. Damilola, oil, yes. Oluwaseun, oil, yeah. What else? It's not just oil that we export. It's just that oil forms like 80% of our exports, right? It's not oil alone. We export several other products. We still export cocoa. We still export other things, electrical energy. Faith, what do you mean by electrical energy? That is not a palm oil, yes. Issuing passport, yes. So all the major agencies of government have targets. you know, road safety. When they catch you on the road, when you beat traffic lights and they catch you and they issue you a ticket, but just like in Nigeria, you know what they do? When they catch you, they are not really interested in the ticket. Because when they ticket you, that money goes to government directly. So they will enter your car and speak to you, just this fine. Your fine is supposed to be 50,000. Penalty or fine is supposed to be 50,000, but just give me 10K and then you can go. That 10K will not go into his own pocket. And the 50K, but what you have done in that instance, this thing about Nigeria is very sensitive. The problem of Nigeria is largely not about the government alone, but even us, the followers. Do you know that anytime that you bribe a road safety for doing something wrong, I'm not saying that you didn't do anything. Well, it's unlikely that you do anything and they will harass you. It's unlikely. Maybe you've broken traffic lights, or your driver's license has expired, or you are driving on an expired insurance. So something has happened. They stop, for example, this still happened to me like a few weeks ago, and I'm not forming saints. I'm going to just tell you what I did as well. So I was driving, it was very late in the night. I was coming, we had to get together. So this was around 12:30 or 1 a.m., right? And I just drove into the midst of, it was actually, they call it, it's not just police alone. They said what do they call them? When they have operations where they have all of them into into a group. So that group has police, has road safety, has NDLEA, has task force. Yes, they call it task force. They said it's a task force. Just stop me on the road and then, thank you, joint task force. Just stop me on the road and then said, where's my papers? I gave him papers. Looked at it, said, okay. This was December, during the festive period, around 20 something after Christmas. Then told this guy, oh, his paper is okay. Where's my driver's license? And the truth is, my driver's license has expired on my birthday this year, last year. My birthday is February 5. And you know the way driver's license works, they will ensure that your driver's license expires on your birthday so that you can remember, right? And I have paid for it. But because I wanted to do good Nigerian, I said, if I can renew it online by myself, why do I have to go and give somebody double the money, right? To get the license. If I had known, I would have just paid double the money and moved on. So I renewed it online. I chose that I didn't need to capture again, because why am I capturing again? Because this is like I've renewed it several times. I don't need to capture again. Just process it. They said, choose a processing center. I chose Mabuchi because I'm in Abuja. I chose Mabuchi. And then I went to the Mabuchi with the form that I printed. This was sometimes even before the license expired, though, like 1 month to the expiration. When they looked at it, they gave me the test. You have to read something to ensure that you know your road signs. I passed. Next time they look at it, say, oh, you've chosen that you don't need to capture. Don't worry. We'll just process it. When it's ready, you'll get a text. This is January last year. And I'm talking about December. They did not call me. I was carrying around that form. They said that form is enough. Like they stopped me anyway. That form shows that I've paid. It is on them. They did not process it. I showed the guy the form. So on this occasion, I was driving. Now, carrying form up and down. If I had known, I probably have dropped it in my car. Of course, I drive 2 different cars. I drive my wife's car sometimes. I drive mine. So sometimes, I think I was driving the second car. It was in the first car. So they checked and asked for my license. I didn't have that paper at that point in time. Guy was not like, hey, his license has expired. I said, I've paid. Then he said, calm down. Let's go to the road safety that they have an app to confirm whether I've paid or not. I was happy. I said, okay. If they have an app to verify that I've paid, no problem. We followed. We got to the road safety guy. The guy checked and said the app was down. So what is that my fault? back at the end of the day, what are we going to do now? And all of that. They will impound my car. I said that's not possible. You can't impound my car. This is already one. And we've now been there for like 30 minutes. We're now around 1:30, going to 2 a.m. Like, let me go now. They kept stopping different. In Abuja, people drive around in the night like that. They kept stopping different people because it's inside town. Right. At the end of the day, I had to give them money. Right. them to let me go. But the point I'm trying to make is anytime you give a bribe like that to those people, you have denied government revenue. What I should have done, what a normal, not a normal, I'm a normal Nigerian, what a righteous Nigerian should have done in that instance is, okay, give me the ticket, no problem. I'll go and pay the fine, right? Even though I paid, I paid for the license, I would go. And what I even found out is the fine for most of these offenses is not up to what we used to bribe them. For instance, that they caught you, you're not using seat belts because you're in a hurry. And at the end of the day, you bribe them 20,000. Meanwhile, the fine for not using seat belts is like 2,500 or 5,000. But because we don't just want that waste of time and all of that, so anytime that you bribe them like that, what you're doing is you are denying government a revenue. So you are part of the people that is not allowing government to see money to be able to pay their debts. Of course, we can now make another argument that, oh, I beg you, government that is stealing money and all of those things. But what I'm trying to say is just as government have challenges, we citizens too, we have our own problems that we need to address. Give me a minute, guys. So, right. So that's what I'm saying. So anytime we compromise like this, we deny the government of making revenue that they could have used to, meet their own debt obligation. So again, government issue bonds and all of these things to raise money. And I said, how do the repayment come? They get it through tax revenues, through refinancing. And that's very important. We need to understand that concept of refinancing because our revenue is not coming in enough. We now end up refinancing the debt. And what refinancing means is you take another debt to pay off the debt that you are owing. That's what refinancing is, right? Issuing debts, new debt instruments to pay off old debt or economic growth that increases fiscal capacity. Example, the US Treasury or Nigerian government issues bonds regularly to finance federal spending with buyers ranging from domestic investors to foreign investors. Let me move a bit faster now. So, what are fixed and variable income securities? When you think about investment generally, paper investments, they all fall into two categories, fixed and variable income investments. Fixed are those ones that are predictable. You already know what you stand to gain. You already know the percentage that you're going to get from it, the yield. But variable, you're not sure. Example of fixed income is bond. When you want to subscribe to government bond, again, I said bond is the way that government borrow money from people. Savings bond. There are several kinds of bond, by the way, it's not just one bond, and we'll look at them. Then variable income. Variable are the ones that are not predictable. You don't know what you're going to get in terms of return when you're starting. Examples of that would be stocks. When you buy a stocks, even though your projection may have shown you that it will increase in price, it is not certain. It's not, I think I mentioned it last week that we don't talk in terms of absolute within our sector. We don't say that when you invest here, you will get 100%. No, nobody can talk like that. We just show you some predictions and say that based on this, based on that, based on trend, we do what is called trend analysis. Based on this trend analysis over the past 5 years, this is the performance of this company. Because it has performed like this over the last 5 years, it's likely to perform like this in this year, right? We just use past past record to predict future performance. But we also now leave that vacuum or that that um that fact that we are not God, but anything can happen. For instance, now think about in 2019, all the predictions that people did, the market is going to go on the upward trend. This is going to happen. Then towards the end of 2019, the world experienced what it has never experienced before, COVID. And in 2020, everything was shut down. Nobody saw that coming, right? So that, so for me, I just think that that's one of the ways that God just reminds us that of our humanity, that we're just humans, and we need to just watch it when we are predicting things and, saying things in a certain way. Predictability, one of the words that clearly differentiates fixed and variable income is predictability. You can predict what you will get when you are investing in a fixed income instrument. So these are some examples, like I said, bonds, mutual funds, fixed deposits, money market, short-term instrument like treasury bill, commercial paper, certificate of deposit are all fixed income instruments. Variable income will be shares, ETFs, and REITs. Let's talk about mutual fund because this is one of the most popular type of investment that you must have heard about. Mutual fund is a pool of money. That's the first thing. Mutual fund is a pool of money deposited by thousands of investors, collected by a mutual fund company, commonly called fund manager or asset management company. The fund house then uses the pooled money to buy stocks, bonds, commodities, etc. There's something called underlying assets, and we must try to get used to understanding these technical terms and using them in our everyday lingua as well. So, underlying assets is what that fund invests into, and that is what you would give you a sense whether it is high risk, medium risk, or low risk. What that fund invests into. So mutual fund is just an umbrella fund that pulls money from different people. When that money has been pulled into that bucket, they now invest it into different asset classes. For some mutual fund, they will say that we just want to invest 80% into low risk assets like government bonds, and other low risk assets. Then they can say that we'll invest 20% into stocks. Any mutual funds that invest into stocks will sit between the borderline of medium to high risk. It's never a low risk because the stock market is volatile. And volatility means that it changes, because the graph is upward slope, downward slope, just goes that zigzag mode. So these are the types of mutual funds that we have. We have equity fund. Equity fund is a type of mutual fund. When I showed you my account last week, I showed you the equity fund that I have with Cardinal Stone Partners. And I think in that equity fund, last year I made about 51 or 52%. I can't really remember right now the actual percent that it grew by. When you put money into equity fund, don't forget, equity fund is a type of mutual fund. That fund manager will now carry the money and invest it into stocks of different companies. I want to see whether you guys followed me last week and maybe you found time to listen to that class again. What did I say is the difference between putting money in equity fund and buying the stocks by yourself when you do non-discretionary? What did I say is the difference? Anyone? You want to type it or you want to talk? Because I did explain last week the concept of equity fund and I told you guys the differences between equity funds and yeah, anyone? John Paul, your hand is up. You can talk. You can unmute and talk.
Okay, so let me try. So the equity fund is like is a mutual fund. What it means is the fund manager pulls funds from various retail customers,
Yes,
and then based on their own expertise, they pick the stocks and invest in them.
good.
So in terms of the risk exposure,
Mm.
You are less, the risk is less than when you are investing in individual stocks because you are kind of leveraging
The
or
expertise.
diversifying across the basket of stocks that the fund manager puts invested the money in.
Okay.
So that's the difference between equity-based mutual fund and investing in stocks individually. Yeah.
Okay. All right. Thank you. Any other person has any other thing to say, to add?
Hello, sir. Yeah, so basically, I think, what you had said was, I mean, just to summarize, is like getting experts. I mean, no one is an expert, but, sort of getting experts, you give them your funds, they, use their knowledge and expertise to get you better returns as opposed to you doing it by yourself.
Excellent. I like that we all still remember that concept of, equity fund, giving the funds to the mutual funds manager. They buy the shares in their name and manage it. And what you just get is the return that in terms of the capital appreciation of the amount that you have put would increase. And I said I made like 50% and above. So that 50% is the capital appreciation. But during the year as well, they pay me dividend. So, when they buy the stocks, companies in Nigeria normally would pay dividend to all shareholders. Under equity fund arrangement, the fund manager is the shareholder of that company. So let's say they bought MTN shares. If you go to MTN registrar, you would not find your name as one of the shareholders, but you will find your fund manager's name as one of the shareholders. Whatever MTN pays them as dividend, they share a portion of it. They can decide to retain some because at that point it's their money, right? They are already getting what is it called? Capital appreciation in terms of the value of your investment is already growing, right? But they still pay you some of those dividends as they please, right? So that's the way equity fund works. The other type of mutual fund is fixed income funds or bonds, right? It invests in debt instruments like bonds and government securities. Then we have money market funds that invest in short-term debt, which is where a money market mutual fund comes from, right? So how does this really work? Most of us don't know that banks, even though banks have a lot of money, depositors' money, they cannot spend depositors' money. They cannot, if a bank wants to pay salaries of the staff members for this January now, and they look at their books and they cannot afford to pay the salaries because they've not made a lot of money to pay the salaries for the month, they can quickly go to the money market, call any fund manager and borrow money from them short term and say, please give me more like it. Just like you, when you need money. Some companies, I know most companies don't do it anymore. Some companies allow salary advance. You can go to your HR and apply for salary advance. And when your salary comes, they can now take off that money from your salary. In the same way, banks can go to the money market to borrow money. Say for 1 month, just quickly borrow us this amount at 21%. So we can use to pay our salaries or meet the obligation that we have in front of us that we cannot afford to meet on our own. And when we have money, we pay back with interest. Another concept I want to quickly share with us, this just for the sake of learning, I like to just introduce all of these things as they come to my mind, is the concept of share capital and paid up capital. Just yesterday or 2 days ago, SEC released a list of new capital requirements. I saw it coming because CBN has done it for all banks. PENCOM is doing it right now. So CBN has said all banks must recapitalize, and the deadline for banks is March 31st, 2026. PENCOM also released one last year for all fund managers to recapitalize. Fund manager in terms of pension administrators, because PENCOM only focuses on pension fund administrators, and I'm talking about the likes of Stanbic IBTC Pension, ARM Pension, and all those pension companies. Those ones, so they need to recapitalize. So now SEC has now released its own recapitalization mandate, saying all companies within its purview, or capital, they call them capital market operators, CMO. So all these asset managers that I was talking about, investment banks, venture capitalists, private equity, all those firms that operate within financial services that are not banks, they have now been told to recapitalize, right? Starting from so the likes of Bamboo that have stock, that Bamboo is a sub broker. So Bamboo has a sub broker license. Up until day before yesterday, their capital requirement was just 10 million. Right now, they've increased it, I think, to 200 million. You must have 200 million. So if I want to register my company as a sub broker right now, I must have 200 million as paid up capital. And I remember because we're trying to register a fintech right now with SEC. Myself and my team, we've been talking to SEC about this platform. And one of the things that came to us as a shocker was, when we started this whole idea, our paid up capital that was needed is just 10 million. Now we don't even know how much we are going to need. And my lawyer was like, okay, maybe we'll just increase our share capital. I said, no, you don't understand. And I see that's the thing with a lot of people. People don't understand the difference between share capital and paid up capital. When CBN says banks should get their capital base at the international bank level, they're giving them 3 levels: international banks, national banks, regional banks. International banks are the ones that have operations out of Nigeria. Example, Access Bank. Access Bank has operations out of Nigeria. GT also has operations out of Nigeria. First Bank also has operation out of, because like FBN UK, like their subsidiary bank. So all those banks that want to retain their international status, they need to have a 500 billion capital. The second layer are those national banks. They can only operate in Nigeria. Those ones need to get their capital base to 200 billion. The third category of banks are the regional banks. Those ones need to get their capital to 100 billion. And regional means that they can only operate in a region. In Nigeria, there are 6 regions, 6 geopolitical zones in Nigeria: Southwest, Southeast, Northeast, Northwest, North Central, all of those things. South. So we would see some banks right now that will close all their other branches in other parts of Nigeria. That's what is likely, because what is likely to happen after March if some banks cannot meet the capital requirement. I've seen a list that said most of the banks have actually met it. Maybe only about 2 or 3 have not met it right now. What is likely to happen? So what we're likely to see is some banks would have to downgrade their license from international to national. For example, UBA has an operation in the US. If UBA does not meet 500 billion, then it has to downgrade to become a national bank. And then they work towards it. Maybe it will take another 1 year to be able to work their way up to that 500 billion. They can now upgrade their license. CBN will be flexible about it. But that any bank will just close now. I don't think any bank right now would close. That's what will likely happen. Some banks will downgrade. Some will not be able to meet national capital base. So they will settle for regional. They may likely now close all those other branches. If we choose Southwest, it means we cannot operate in the north. We'd have to close all our northern branches, sell the properties, or cede them to another corporation and all of those things. So all of these guys are saying, when they now say that 500 billion, that 500 billion, let me help you guys also understand it. That 500 billion capital base that they've required, it is capital base. It is not your customer's money. It is different from customers' deposits. It is the money that the bank itself has as a bank. It doesn't have to be cash. It can be an investment, right? It can be shareholders' fund. The money that you have. And when there's something in your capital base, it means at every point in time in your operations, your money must not fall below that, because authorities can come anytime. Let me use a figure that we can relate with. So now I want to register my company. Now, the company I want to register right now, what I'm sensing is that the paid up capital will be like 100 million. So for them to give me that license, I must put 100 million. I must have a company account or a company investment, an investment in a company's name. And that money must sit there. That 100 million must be seated there. It's like insurance money that I cannot touch. But in reality, it's not like I cannot touch the money. It's just that at every point in time, there must be a race to get that money to that 100 million. So that anytime, for instance, now, maybe something happened, I could pay 10 million. It's not like you cannot borrow from it. You can borrow from it, but be praying that it's not that time authorities will come. If they come and request for your statement and they see 90 million, you get a fine. So there is always a race, even if you touch it, there's always a race to close that gap at every point in time. When you say it's your capital base, it means it's your foundation, it's your base. That's the base amount that must be in your operations at every point in time. So if I go below 100 million, maybe for some reason I become 80 million, and authorities come at that point in time, it means I'm flouting the requirements of my license. They can withdraw that license then, and then they ground your operations. So that's what is happening within the financial services sector. Not only that, NICOM too. I think NICOM late last year as well said all insurance companies should recapitalize, which now opens a lot of opportunity. Guys, if there's anything I want you guys to be very attentive to, you have to be very intentional about knowing what is happening within the financial services industry of your country. It would change your financial life, right? Because there are a lot of opportunities. So this business that I'm starting right now, or it's not like right now, I started it like because it's a software, it's fintech. So it takes a lot of effort, a lot of background work, a lot of back end work to get it functional and to the phase where customers can now start using that product. We've been at it for more than 6 months right now, talking to different partners, talking to different regulatory authorities. But the idea came because of the opportunities that I saw within the financial services, within the policies of the government, within the policies. So with every policy of government, this is what I want your default to be. And this is totally out of today's class, but it's a knowledge you need to have, because it will be hypocritical of me if I just give you all this textbook information that you can have access to, and I don't tell you the real thing that actually make people rich, right? Because it's supposed to be a finance and career accountability program. That's what FACAP is, where I share things beyond the textbook, that learnings that have helped me, that can help you too. So the things that make people rich are not sometimes they are the simple things that a lot of people ignore. You must invest yourself. When you see any policy of government, whether it affects you or not, try to read it, understand it. Sometimes it may be complex to understand. That's why you need a tool like ChatGPT or other AI tool. You can upload it if you have the paid version. I think you need to have a paid version for you to be able to upload documents and ask ChatGPT to simplify it. I do that as well, even at my stage. I get some reports, like 40 pages report, 50 pages, and I can't read it. I don't have the time to read it. What I do in that instance is just upload ChatGPT and just say summarize, give me a power summary. What are the highlights? You can ask questions like that, and then you get out of the way. So again, types of mutual fund, money market. The next one is balanced or hybrid funds. Balance, from the word balance, is also called hybrid. From the word hybrid, some of you work remotely and also work from the office. So it was common immediately after COVID lockdown. It was very common, but a lot of companies are opening up. I saw an article from JP Morgan Chase. It's one of the biggest financial services company in the world, that they are building one massive office complex, and they're actually calling all their staff members to come back to work 100%. No more, the world will go forward, we'll come back again, we'll go forward, we'll come back again. Things just keep changing, Remote work was a norm. We thought that remote work would be like a thing of forever, right? But now it appears that a lot of companies are now backtracking and saying, no. We want our people to start interacting. Physical work is now becoming the norm. So they're calling people to come resume back to work. So balanced or hybrid fund. The same way, there are some funds that are hybrid funds. They invest 50% into stocks and invest 50% into bonds. Stock is medium risk, bond is low risk. Then we have index funds that track specific market index. Index fund is similar to ETF, exchange traded fund. The major difference is simply that index fund is the use of computer programs to track the performance of shares. And the way I can explain it is to use S&P 500, which is one of the most popular ETFs or index fund in the world. S&P 500 invests into the stocks of 500 companies, top 500 companies. The asset manager would have set up some requirement on the system that at every point in time, we want the bucket of this S&P 500 to be top 500 companies in the world. anytime a company falls below any of the metrics that makes it less than, that makes it not one of the top 500, kick out that company and find another company that meets the requirement and add the company. So that's how index fund is programmed to work. At every point in time, it's tracking the performance of those 500 companies. If any of those companies falls below a threshold, the system automatically kicks out that company and replaces it with another company that is better. So that's why S&P 500 has been historically it has been performing, because at every point in time they kick out company that is not performing and replace it with the one that is performing. So I need to move fast, like I said. The first fixed income instrument that you need to understand is bond, and I kind of explained it already. The bond is the way that government raise money from members of the public, and bond is always issued. The interest that they pay on bond is called coupon. You need to understand those key terms that is used as well. So when you subscribe to federal government bond or corporate bond, what you get is coupon, and bond pays that coupon quarterly. The federal government bond in Nigeria pays the interest every 3 months. So if you invest in bonds today, you invest like 10 million naira in bond today, or in a 3-year bond that pays 17% per annum. Can someone give me a sense of how much you think you'll get in those 3 years as your coupon? That's a class exercise. I want to see the response. You invest 10 million in a bond, a 3-year bond that pays 70% per annum. How much would you get at the end of that program in terms of coupon alone? Coupon alone without your principal. How much? Just put in the chat box. 17% per annum for 3 years, 10 million. Sweet, is that right? I want to say 100%. I've not calculated it, I'm just asking. The example just came to my mind now. It's not like I thought about it before. Any other person to confirm that whether the answer is right or wrong? Okay, if it's 5.1%, then 5.1 million, then it means you have all calculated it. What it just means is every year you are getting, if it's 17% of 10 million is 17 million, is 1.7 million per annum. So 1.7 million times 3. It can't give you 5.1. Guys, what are you guys calculating? I said you invest. Is that the amount? Is it 5.1? Because what you're supposed to calculate is 1.7 million every year for 3 years. 1.7 times 3. Is that 5.1? Okay, good. Thank you. Yes, thank you. I just wanted to push you guys to be sure that we all understand. So excellent. So 5.1 is what you get as your interest alone in those 3 years. Or at the end of the 3 years, you will now return your principal of 10 million naira back to you. Right? It's just like, borrow me this money, I'll pay you this interest, and I'll return it to you at the end of 3 years. That's what it means. The good thing with bond, let me tell you some of the advantages of investing in bond. As of today, right now, bond is the only investment that you won't pay any tax on. It is tax-free. Your interest is tax-free because you are lending government the money. There has to be an incentive above putting the money in another investment. Because someone will say, why would I put 10 million in bond and get 17%? And I can put the same money in money market and get 20%. It doesn't make any sense to me. So one of the sense that you can justify it with is the fact that first off, it's tax-free. You won't pay any tax on your interest. That's the first one. Number 2, bond is the lowest. If you want to classify low risk in terms of how low the risk is, bond will be at the minimum. Bond is the one that has the minimum amount of risk in all investments in the world. Why? Because government, people rather blend money to the government. Why do you think people rather lend money to the government? Let me direct that question at us. Why do you think lending government money is better than lending a private company like a Dangote PLC or MT? Why do you think lending government money is better?
Because government, you have 100% guarantee that you'll get refunded, and
Okay.
whatever they say it is, that's what it is.
Excellent.
That's return.
Excellent. So yeah, That's why you're very correct. No bankruptcy. I've never seen a country cannot declare bankruptcy. Dangote, as big as Dangote is, Dangote can declare, God forbid, Dangote can declare bankruptcy. John Paul, your hand is up. Government isn't running away. Yes, true. Stability,
What,
true.
what I think if you sell the bond before maturity, you may not get exactly what you're supposed to get.
Okay, that's another nuance. That's another point. Yeah, I'll get to that point, which is true. Yep. What do you think is? But I want us to focus on that. But there's one point that I'm really looking out for. We all know it, but maybe we have not just thought about it because it's not a rational thing that most countries do, but it's the worst case, which is government is the only one. Even if government does not have money to pay you, government can print money. It's possible. Though. Government can print money to pay the debt that they are owing, even though that will now lead to inflation. One of the primary duties of CBN is to control inflation. The CBN of any country in the US is not called CBN, it's called Feds, Federal Reserve. Federal Reserve in the UK it's called Central Bank or the Bank of England. Bank of England, CBN in Nigeria. They are the ones in charge of controlling inflation. If government prints money anyhow, it will lead to inflation. And let me help you understand that and use the case in point of a country that has happened to. I don't know how many of us are familiar with the story of Zimbabwe at the point when Zimbabwe was just printing money recklessly and their currency lost value so much that, and this is not a joke, it's actually very correct. That if you want to go to the market to buy ordinary pepper and things that you used to cook, you'll be going to the market with millions of Zimbabwean currency. I think it was Zimbabwean dollar then, Zimbabwean dollar, right? You may want to buy cup, and they will tell you that the cost of the cup is 1 million Zimbabwean dollars. Their currency lost so much value. And that is why also government cannot just increase civil service salary anyhow. People have said it. Eh, why is minimum wage is currently 77,000? Why is this currently 77,000? When politicians are earning in millions, why can't they just increase the minimum wage? The minimum wage now should be 1 million. Okay, no problem. I tell you guys that if the minimum wage becomes 1 million today, the inflation that we would experience in the country will be astronomical because naturally everybody will take up the price of everything that they sell. It will shock you that by the time you want to enter bus from Aja to Lekki, conductor will call you 500,000 naira because why? Everybody's now a millionaire now. So everybody now has money. So and everybody wants to have a cut of the pie that everybody now has. So which is why when you study the history of increment of minimum wage in the country, at every point in time that they've increased the minimum wage, cost of living has also increased as a result of that increment. It's just the way these things work so that's why economists are an integral part of every society to help you moderate every decision that you want to make. You cannot just be releasing money into the economy just anyhow, right? So I said all of that to say one of the things why government is one of the strong borrowers that people will rather lend the money to, because government has the capacity. So apart from with all the reasons that we have all mentioned, correct, but government above that, government also has capacity to simply print money and use that money to repay their debt. No corporate organizations can do that, and no individuals can do that as well. But government has that kind of power and authority. So these are type of bonds that we have. So someone mentioned that if you sold, so there are times that you may not get the return that has been promised on your bond if you trade your bond before maturity, which is also very possible. So the way bond works in Nigeria depends on the structure. There are some bonds that are tradable. There are some that are not tradable. Not all bonds are tradable, especially the federal government savings bond is not tradable. You have to hold it to the end of the period. But if you are doing other type of bond, there's some bonds in Nigeria right now that corporate institutional investors, not corporate, institutional investors trade in. It's the minimum entry for that is like 50 million as well. When they buy that bond, and even if it's a 3 year or 4 year bond, they can trade it on the floor of FMDQ. So there is another exchange apart from NGX and NASD. NASD is for companies that don't have the capacity. They are big, but they are not listed yet. They don't have the requirement to get listed on NGX. They can list on NASD. It's an alternative platform. Yeah. But there is still another one that is called FMDQ that is really for the listing of bonds and all these government securities. So if I get that bond, 50 million, I don't want to wait for that period. I can simply trade it, meaning I can sell it on the floor of stock exchange, and that's on the floor of FMDQ, and that bond becomes the property of another person. That person will not be the one that would earn the return on it. So these are the types of bonds that we have: corporate bonds, federal government bonds, and state government bonds. But there's also something called Euro bond. For some of you that may say that I just don't want to invest in Naira. And I won't lie to you guys also. If you have a long-term plan to become wealthy, you need to have some of your investment in dollars. I know some people that they started investing in dollars when they started in some of their investment in dollars when dollar was still trading at 150 naira. Think about, just think about it. You're not even just investing, you're just saving dollars. You just have a culture. I do it. It's just that me, I started doing it late. I started doing it when dollar was already like 700. We learn every day. I didn't learn it on time. So every month, as I get my salary, there's a portion of it that I change to dollars, regardless of the amount that dollars is trading for. I change it to dollars and I simply put it in my DOM account. It's not an investment, though, right? It's just because I realized that because of Naira volatility, saving in dollars in Nigeria has now become more like an investment. It may not make any sense again now, but as time that I started, or the guy that started when it was 150, it makes a lot of sense. But now it may not make sense again because now that there are a lot of projections that dollar may go down, even though I think it may slightly increase by towards the end of the year. And the rationale behind that is election year. If you have studied our history, election year, politicians always mop up dollars. They keep buying the dollars because they want to use it for their election. They want to bribe. They want to do all of these things and all of that. So they mop up the dollar. As they mop up the dollar, it becomes scarce. And whatever is subject to the law of demand and supply, when the supply is lower than demand, the price is meant to go up. That is the natural economic law. So that's what will likely happen towards the end of the year. Dollar may go to like 1,500, slightly above 1,500, right? The projection that I saw from Deloitte says that it will go to like 1,597, right? Some other people believe that it will come down with Dangote's efforts with the refinery and all of those things. So investing in bond, you need $200,000 to invest in Euro bond. That's the minimum. So it means that it's only institutional investors that can really invest in this. But if you want to do it at the secondary market, you need as high as $1,000 to start. I'm saying all of this because if you want to build long term, your investment needs to be diversified. As you have Naira investment, have dollar investment as well, and have a long term view. It's not something that you put money today and you want it to double by tomorrow. It is not sustainable. 10 years, you are planning 10 years, your wealth plan. I don't know I don't know the average age of those of you on this call, but based on what I've seen, from interaction, maybe the average age would be like 32. That's the average age, meaning that there'll be some people that are slightly above 30. There'll be some people that are in their 20s. It's well balanced like that. For some of you that are still less than 30, you can start your wealth building journey. I started mine 6 years ago, and it's 15 years. A standard wealth building journey should be 15 years. If you're a new career person as well, give yourself a block of 15 years. In those 15 years, you are going to save and invest voraciously. After those 15 years, you can now start enjoying your money, right? But in those first 15 years, you are saving, you are learning everything you need to learn about saving and investment. You are working really hard. You are doing multiple things. You are diversifying. I showed you guys 3 income streams that you should have. I said active, passive portfolio. Active, passive, portfolio incomes. Within your active income, it doesn't hurt if you have like 5 active income streams. Right now, I have more than 5 active income streams. In my passive income, I have like 2 or 3 passive income streams. Portfolio income, I have like another 4 or 5 income streams within each of those income streams as part of my wealth building journey. So by my year 15, I want to retire and then start living on the return. So by year 15, my active income would have reduced. Maybe 10% of what I'll be doing, of the money I'll be making, only be coming from active income. The bulk, 90% of the money I'll be making after 15 years of this, my 15 years journey, will come largely from portfolio and passive income. So as you are working hard, you are building your passive and portfolio income streams so that you can reduce the percentage that comes from active income. So that 10% will just be you are working for fun, right? So right now, I was talking to members of my team, members of the community, that this year, outside saving and investing that we're doing, we have the accountability pods, and you guys are also going to be able to join the accountability pods from after next class. By next class, your 4th class, the final week, you join each of those pods, and you can now start investing towards the goal that you have set for yourself. I believe based on the financial planning class, you've developed your goals. So from those pods, we'll start investing. But I said much more than investing and saving. I want us to do a community trip sometimes in summer. Summer is between July and September. That's when summer is. So we'll just pick like 5 days. We'll go on a summer trip. Everyone that is interested, that can afford it within the community, will go to Kigali. Because I don't know, I just fell in love with Kigali right now. So we'll go to Kigali for those that can afford it. And I said, I need 5 people that can plan the trip. I'm very spontaneous. It just came to me. I was watching a piece that Ebuka was doing with his friend. Ebuka, Big Brother. It's something I've been recommending to everybody as well. Something you should watch is Ebuka takes over Africa, something like that. It's on Amazon Prime. A lot of times when we think about travel, we always think about the UK, the US, Canada, and all these fine places, Dubai. We hardly think about Africa. Some of us I even think about Africa, South Africa we think about. For instance, I've never really thought about Rwanda. I've been to Rwanda once, and that being to Rwanda was just passing through. I was flying to South Africa, so I entered Rwanda Air. The flight was delayed, so we slept in Rwanda. So the Rwanda that I've gone to was just passing through Rwanda, slept in Rwanda for a night. I didn't really experience that city until I saw it in that book and said, oh, this is actually a very fine place to go to. So I just told the members of the team, I need people to plan. You guys also have the opportunity to be able to join that larger group and then make a decision whether you want to go on the trip or not. And there's something to plan for, because I believe that as much as you're saving and investing, one of the best investments you can also do is see the world beyond your immediate environment. It changes your perspective, and it positions you as you just be in a better place, right? So that's just by the way. The next one is T-bills. T-bills and bond are instruments that the government uses. The difference between T-bills and bonds is T-bills is short term. T-bills is for raising funds for less than 1 year. For less than 1 year. It has to be less than 1 year for it to be T-bills. So this is how T-bills work. T-bills work I told us that it can be primary or secondary. The primary market always works in a bid format. And I'll try and explain how that works. Let's assume that government wants to raise 50 million. That's the only thing they want to raise. Only 150 million from different investors. You will get an email from your fund manager to say that the bid will be opened from Wednesday to Friday. It's always very short, maybe like 3 or 4 days. You now say you should send in your bid. I can send in my bid and say, okay, government, I want to lend you this 50 million. But what I want you to pay me 10% as my interest. So you're paying me 5 million as my interest. That's my bid. I'll send in that bid. I'll put my account details and everything. I want to see names of people on the call. Abigail can say that I'll give you this 50 million, but what I want is 15% as interest. So what's 15% of 50 million? That should be 7.5 million, I think. Another person can say, Billy Kisto can say that I want money. I'll charge you 20% on this 50 million. So that's 10 million. That's the interest. Another person, let me say another person. A person that feel that would like money a lot. Faith. Faith can say that me, for this 50 million that I want to lend you, I want 50% as my interest. So we all say what we have done is we have created our bids. We send the bids individually, of course, to CBN, because I say CBN is the one that champions that process on behalf of the government. They will now open the bid and review it. At the point of review, don't forget, I can only pick one person. If you were CBN, who would you pick that is most reasonable for you, that is less, that the cost of funds is less to you, or is more manageable to you? Who would you choose? I want to hear you guys.
The person that said 5%.
Excellent. The person that is charging, because think about it, I want to borrow money. Someone wants to give me 5%. Another person said, no, I must pay 25%. Another person said, I must pay 50%. The person that choose the highest, to choose the least, is what is most beneficial to me. So, which is why when you send in bids for T-bills, not everybody will be chosen. They only choose people that they feel are more competitive and more realistic that they can afford, right? Don't forget the primary market. So let's assume that the one that chose the 5% is the one that they now chose as the winner. It means at that point, the person will now only pay 50 million less 5%. Let's use 10%. So for easy calculation, 10% of 50 million is 5 million. So the person will now only pay 45 million. What I'm trying to explain is the concept of how the interest payments on T-bills work. The interest is paid in advance. So they only charge that person for the 5 million. The person take out the 5 million as that person's interest. And at the end of that investment, they return 50 million to you. So T-bill is one of the investments. I think it's the only investment itself that pays you your interest in advance. So it pays you your interest on day one of that investment. I gave an analogy. I don't know whether it's in your class or another class that I took, where I say when I wanted to buy a car for my wife sometimes in 2023 or 2024, the car then was 10 million naira. I had 100 million. The option that I had that a lot of people would probably just do is you have 100 million, you want to buy something 10 million. What's the big deal? Just go to your account, withdraw the 10 million and buy the asset. I said, no, I don't do that. I want to eat my cake and have it. I'm always thinking, how can I still keep 100 million? Let 100 million be my own, and I still do what I want to do. So what I did was to look for a T-bill that can pay me 16%. Then the interest was still very high. Now I think it has gone down now. So I got a T-bill that could pay me 16 or 17% then. I put the 100 million. I was chosen as the winner of the bid, as one of the winners. There were many winners. It's not just you. Many winners. So I put the money, the 100 million. They paid me 17 million in advance. I took 10 million to buy the car, put 7 million in another investment money market. At the end of that investment, they paid me back my 100 million. So I ate my cake and I still had it at the end. So that's the way I think. And that's the way to think as a smart money person, right? So I just wanted to say you should think like that. Please give more details on the trip. Yes, I will give more details. Remind me at the end of the class. Yeah, so that's the way treasury bill works. It's the one that pays you your interest in advance. But they also know that not everybody can afford 50 million. So people that have now bought at the primary market can now retail to other people at the secondary market. So I bought the treasury bill at 17%. I can now bring it to this secondary market and people can now start buying from me. I can sell 100,000, 500,000, 300,000 and share part of that interest of 17% that I've gotten. I can take 2% for myself and share 15% to everybody. I will just say the interest for this, in fact, 2%. I can take 3% and say the interest on this T-bill. I have T-bill worth 50 million naira to sell. The interest on it is 14%. So you bring 100,000, you get 14% of 100,000. Another person brought 500,000, 14%, like that. So those people that are buying from you will now say are those that are buying from secondary market. The other one is commercial paper. Commercial paper works similarly to T-bills. The only difference is it is used by organizations, corporate, non-government. T-bills and bonds are used by and government bonds are used by government. Commercial paper and corporate bonds are used by organizations to raise money, the same way that T-bills work. The last one, okay, before I do this last one, let me just do this scenario. I need someone to read this for me. I need anyone to unmute and read.
ABC Corporation, a thriving FMCG in Nigeria, is looking to create a new product line ahead 2023 Christmas, which is a peak period for the business. Though this business has an excellent credit rating and consistent income, it does not have the liquid cash needed to fund the new product line. Do I continue?
Continue.
The company needs 200 million to produce the new batch. The company's board decided to issue a commercial paper valued at 200 million, and to entice investors, they offered it at 206 million with a term of 30 days. If an investor loans the business to 200 million, it will return 206 million when the term is up. An investor who thinks this is a good deal signs onto a commercial paper with the company and provided the business with 200 million in financing. A month later, the company will return 206 million to the investor.
Excellent, thank you. So it works exactly like it's an investment that most private companies use to raise money. They want a faster vehicle compared to using shares. One of the other ways that company can raise funds from the public is by issuing shares. But sometimes they don't want to go through the process of shares because it takes time. The allotments and all of those things. You must open the offer for maybe like 1 month. When people apply, you start NGX will start doing there are a lot of regulatory requirement that needs to happen. It takes time. But they need a quick fix so they can issue commercial paper to raise money. Quick money is what commercial paper do. If you see somewhere I said commercial paper is used to raise money for time-sensitive liabilities, right? It's a short-term instrument used by corporations to cover certain types of debt liabilities. Always time-sensitive, like you want to pay salaries, inventories, and all of those things. Just like in the case of this company right now, that needs to raise 200 million for Christmas, right? They can quickly issue commercial paper and get the money. But one of the challenges, or one of the very important points you need to know about commercial paper is that it is largely unsecured. It's unsecured credit. So you must watch the company when you see any ad for commercial paper investment before you jump into it, because it offers higher interest than some investment. Look at it now. 200 million is what they want, but they want to give back 206 million just for 30 days. It's a lot of money. But if you jump at it and you don't look at the rating of the company. I want to see where I wrote. I think there's somewhere I wrote that it has to be connection for this. Commercial paper is only issued by firms with high ratings from credit rating agencies because it is unsecured credit. So you have to look at the strength of the company that is issuing the commercial paper before you subscribe, because it's one of the fastest ways to lose your money. If you go and put money in a company that is not strong because they are offering high interest. The last one is certificate of deposit, which essentially operates like fixed deposit in some clients, right? So we all know fixed deposits. You take your money to the bank, 5 million, and they lock it up for a certain period. They pay you interest on it. You already know from the first day that you put the money in that fund, in that account, you know the interest that you stand to gain. Again, fixed income instrument is just those instruments that when you invest into, you can predict and you know the amount you're expecting. They come with low risk compared to variable income investment. They are very stable and you can plan with them properly, and it's always a good place to start if you are new to investment. I said last week, I used the concept of 50-30-20, where 50% of your resources as a starter should be in low risk investment. Then 30% is what you should experiment with in the stock market. Then 20% is for high risk investments. things like you want to go into forex, you want to do crypto, if you're still in your 20s, you should learn crypto. You should learn it. It's not something to run away from. It's a currency that is likely to be the currency of the world that you cannot afford to. I don't teach crypto, right? But because I don't teach it doesn't mean that I discourage people from pursuing it. What I just tell people is ensure that the amount of money you're putting into it is limited. The challenge with most people is greed. There's always that is human. It's not just Nigerian, it's everywhere because I've interacted with people from other countries as well, and I see that it's a common denominator of human beings to always want to look for fastest way to get things done, fastest way to make money, right? So a lot of times people tend to now lose all the money that they have. Same people, what people do is it took them 3 years to save their first 1 million, or it took them 1 year. At the end of the year, they closed the year with 5 million. But because the 5 million is a money market mutual fund and they are getting 15%, they looked at the end of the year, they printed their statement and looked at it. Oh, for a whole year, I only got 15%. Then they start asking, where can I put money that can double the money? Where can I get higher interest? You now remove the 5 million and put it into something that is more risky. At the end of the day, they now lose the money. They will now start again from the beginning. You're not supposed to be starting again from the beginning every year. A lot of people have been starting. They keep building their foundation every year because they're not just patient. They overestimate what they can do in 1 year and underestimate what is possible in 10. 10 years is a lot of time, right? But it's also very important that you give yourself that time to build. It takes time to build, so you need to pace yourself and give yourself that amount of time. I think that is the end of today's class. If you have any question, so based on what we've shared so far, if there's something that is not very clear to you, you can raise your hand. And if you rather type out the question, you can also type it out. I'll just read. Then on the trip, right? Someone wanted more details on the trip. So, like I said, it's not like I've thought about it 100%. It was just something that came to me and said, okay, I can actually take my people on a trip the plan is to go to Kigali, and the plan is for it to be during summer, 5 days. And that 5 days would be 3 days on the trip, 2 days for travel. So let's say we choose, just for example, we choose July 20 to 25. The day we're going to choose will be between July and September because that's when summer is. And there is a team of 5 people that I've put together. They are all volunteers. I'm not paying anybody to do anything. Volunteers that would plan the trip, that the ones what are the things that we're going to do when we get, what are the places that we can visit in Kigali? What are some of the activities that people can do, both learning and experience? Then
What will carry you now?
what is the cost?
You come out.
What is the cost? And all of those things. So that from the top of my head, because I also travel frequently, I've just thought about it. Ideally, if you want to do a trip of this nature, you can work with a 3 million naira budget per person. So it's not compulsory without putting anybody under pressure. It's just something that if you know that this is actually an opportunity, for the first time, I want to travel out of Nigeria. Let me see what it looks like outside it because I'm still very young and all of that. So that's why it's something that I talked about in January, and then people can now start planning before the date. So more details, I would share it on the group, and once I have the volunteers who are interested can reach out, and then maybe a separate group will be created for that. I'm not sure for now, but I think the best way is to create a separate group for that, and people that are interested from all the groups that I have can now join that group where the discussions will be happening. How do you need to apply for visa? But I think the Rwanda is visa on arrival, right? And the hotel and all of those things. Those details will be discussed there. Where do we search for T-bills? T-bills from your app. If you already have an app with any of the fund managers, some of them list T-bills on their app, some of them don't. For instance, if you have Cardinal Stone app, it will be under their fixed income. Just locate fixed income security and check it there. How do we get more information about commercial paper and T-bills and also general financial news? For commercial paper, it's not something that happens every time. I said that companies use it to raise time-sensitive liability. They just need money for something. They raise commercial paper. So it's not something you would find every time. So, but when commercial paper of any company is available, your fund manager will send it to you as an email, or you just log into the app and you will see the pop-up like commercial paper is currently selling. So anytime there is anything like that, you always see it on your app, or they will send you an email. Same thing with T-bills. They will send you the email. And general financial news. For general financial news, I think I mentioned some of the pages that you need to be following, some of the apps that you can, some of the dashboard that you need to be visiting from time to time. I mentioned investing.com. I mentioned for Nigerian news, I mentioned Nairametrics. Yeah. You should also be following some of these regulators as well. You can follow SEC just to know about regulations. SEC most of the time will also bring out list of fake investments that people are falling for. SEC spoke about CBEC a lot of times, but people still don't listen. You can follow them. You can follow Business Insider. You can follow Forbes Africa. Those are platforms so you can get even Nigeria. What's this one? Business Day. You can follow Business Day as well. They tell you some of the things that are happening on the local level that you can. Then another platform I like to visit from time to time is billionaire.africa. So that also tells you some of the things happening across Africa, some of the acquisitions that are happening, some of the companies that have been bought, all of those things. Damilola, your hand is up.
Yes, sir. Afternoon, sir. Thank you so much, for this session. So, I was going to ask that concerning the assignment, that we were assigned, the last time, that's to create a financial plan,
Yes.
covering any of the 4 pillars that you had discussed. Please, are you going to? I mean, it's just a question. Is there a possibility or a chance for you to review one of the assignments with us? I mean, I don't mind if you review my own, so that we can, we can know that our head is straight and, at least,
Okay. All right. Something I've
Yes,
not
sir.
talked about, but I think it makes more sense. So what you're saying is we should have a class where we actually review one person's financial plan so that everybody can
Yes,
decide whether
please.
they're on track or not. Is that what you're asking?
Yes, please.
Okay,
Yes,
that's
please.
fine. We can do that, even though I didn't think about that before. We can do that as, let me see, we have another class next week. We have a Saturday because it's supposed to be 4 Saturdays. But the good thing is
Yes.
in January, there are 5 Saturdays in January, correct?
Yes, sir.
So maybe we can do it on that last Saturday, just because we have another class next week on ETFs and commodities. So next Saturday, if you remind me, you guys should remind me. So I'll just put it on
I
that
will.
last class and then we'll do it. Thank you.
All right, sir. Thank you so much.
Lydia, please can you explain share capital again? I got the explanation on paid up capital. Okay, good. Good that you got it. So share capital is just generic and is more of a regulatory requirement. So if you are registering a business in Nigeria, they will tell you that the minimum share capital, meaning that this company has a share of 1 million. The minimum you can register a limited liability company in Nigeria is 1 million units. But there are some set of businesses, like when I registered Fondora, the digital tech platform, because of what we wanted to do, they told us that the minimum share capital has to be 10 million. So it means the total number of shares that the company has that you can sell in the future, that you can sell to members of the public. As at now, the share capital that we have, that we can now issue part of it, is limited to 10 million. With time, of course, when you become a PLC, 10 million share capital is too small for a PLC. At that time, you cannot increase it to billions, right? Like this UBA that is issuing share capital, and I think their right issue, that the fresh right issue is like 3.2 billion shares, right? It's just, so again, share capital is a regulatory requirement, more like the shares that you must have as a company before you go to the market. And I hope that makes sense to you. Before you start operation, sorry, jump up.
So my question is, I've heard of automobiles. So I don't know if you can explain that to us. Like, is it an instrument that can also be bought and traded as well?
Open market bills, open market operations. You see, in Nigeria, there are no specific bills that we call OMO bills in Nigeria, except is something I really have not found information about, right? But when you think about the concept of open market itself, it's just saying it's a structure, a framework that that everyone can operate, every company that meets the requirement can operate in the open market, right? So that's the first concept you need to understand. That's that open market operation is not tied to a particular instrument. It's just the way the market operates. But again, companies are at liberty to call their investment products what they choose to call it. It may be a type of notes. For instance, now in the US, you will likely see some investment called treasury notes. Treasury notes. But when you read the concept notes, when you read about that investment, you'll find out that it's actually the same thing that we call treasury bills in Nigeria, right? In some climes, you would find certificate of deposit. What we call fixed deposits in Nigeria is not called fixed deposit in the US. It's called certificate of deposit. Do you understand? So again, I was trying to help you understand that you need to put, if you see Omobi, you need to put it in context and understand it. Just read the concept note. There always be a concept note on it. And when you read the concept, you want to understand what is the underlying assets. What is this bill investing into? What is the purpose of this bill? Another one that I did mention that actually also sits between medium to low risk is infrastructure development funds like NIDF. Chapel Hill Denham is one of the frontliners asset management companies in Nigeria, right? They have a fund that they are the custodian, they're the ones that own that fund, but it's on behalf of the government, right? They borrow from people, people can invest to that fund, but that fund is primarily for infrastructure development. So as a company, it's not even government, it's not only for government. As a corporate organization, if you want to develop infrastructure, maybe you want to build a new plant, you can actually borrow money from the infrastructure development fund as far as it is infrastructure, right? You can go to them to borrow the money from that fund and then you pay that interest. So that's another investment product. So how you understand investment generally is when you see that investment, try to understand the underlying assets, the asset that you invest into. That's what will tell you the kind of risk that you'll be exposed to, regardless of the name that the asset manager chooses to call it. And I hope I answered your question. Is there any other question before we call it a day? Okay. Thank you, everyone. In the absence of any other question, I think we can have a nice day. And I will share the recording. I will share the recording on the Google Classroom sometimes today. Please enjoy the rest of your weekend and bye for now.
Thank you, sir.
Thank
Thank you so much.
Bye.